going on, guys? What's going on, traders? I hope you are having a good week. So if you are new here, guys, we talk about ICT, we talk about BTMM, we talk about demand and supply, we talk about institutional trading. So if that is something you are looking forward to learn, to know more, or to explore, this is the channel, guys. Click that subscribe button, turn on your post notifications so that you'll be the first to be notified whenever we upload a video of this nature or better. Guys, today's topic is about boom and crash. We're going to be talking about how to read price and how to enter trades on boom and crash, how to interpret these charts. So the boom and crash charts are not normal charts per se. The candlesticks are not that normal to a lot of traders, and they find a hard time interpreting these charts. So today, guys, I'm here to help you understand how to look at these seemingly complex charts to you. Let's start with market structure, guys. How do we read market structure on the boom and chart or on the crash chart? So what we are saying is, if we are in an uptrend, guys, if we are in an uptrend, we are expecting to see price breaking the highs, and if we are in a downtrend, we are expecting the opposite, price breaking the lows. So this is what is happening. Okay, let's look at this chart, at this price chart which you are seeing right now. So as you can see from this one, we are having a downtrend where we are having price moving down like this. If we can be drawing our trend lines, you can be seeing that this is a clear downtrend of price. So this is what is happening. And price is breaking the lows. So these are the lows, the lower lows in price, the major swing lower lows. This is 30-minute time frame, and these are the lows on the 30-minute time frame. So what you are seeing here is price breaking the lows, breaking the lows. That action of price only tells us that we are in a downtrend. So with that in mind, we are going to be looking for sell opportunities on the crash 500 index on this particular piece of price action. Going to look at every point where price broke the lower low and created a new lower low. So what we are going to be doing here is, if we look at this, let's just say this is the peak. This is where price was turning, right, to begin the downtrend. So what happens here is, you clearly see that after this we are having this which is our a break of structure right here. So this is the first break of structure. After this is the first clue that price has changed direction. Price is now moving downwards. The first clue is the break of structure, right? Then price comes down, comes down and breaks this structure, which is a major swing low on M30. So this break of this structure then tells us that no, price has made a decision to go lower. So this is the decision point of price. After break of this, look at how price broke that area. It broke aggressively. So after this, you will be looking for your order blocks. So the strongest order block in this area, responsible for these two breaks or three, this is also a break of structure, is this one or B right here on top, this order block. Why? Because it's responsible for the change of trend number one, which is the break of this one, the break of this side. We're not considering this because this is not a fresh order block. It was retested by this move, but this one is fresh. That haven't been retested. These all are retested order blocks. So this one is the only sensible order block to be used in this case. So price makes its way to the order block, retests and goes down, right? So this would have been your entry if you be fencing this order block to hold your price. Then after that, let's go to this low. Our attention now shifts to this low. Why? Because price has broken this low and formed this new lower low. So this is where our attention is now. So after this break, we are not considering these order blocks. Why? Because this has been retested. We want the bigger picture, or the stronger order block in this area, which is this one. And as you can see, the price did not make its way all the way to that order block which we had but no problem, we look for more order blocks. So after the break of this low, again this low was broken, yes, this low was broken, and we formed another low, which is this one. So our attention now shifts to this new lower low which has been formed by price. So this is how we look at price action, even on a sugar chart, on a coffee chart. The difference is the same. So now after this, you clearly see that this is the strongest order block. Why? Break of this structure, break of this structure, and this would have been your entry and your take profit. Safest to take profit would have been this low right here. Why? Because the low we are expecting price to break. Why? Because we have created this new low now, then we've broken that new low, creating this new low. After this new low has been created, we are anticipating price to create another new low. So for price to create another new low, it has to break this low. That's why we say this is the safest to take profit. Why? Because we are just betting on price getting to that low, not breaking it. So this is how you look at a boom and crash chart. And as you can see now, after the formation of this low which preceded this one, we have price breaking the what? Breaking the high. Now the trend has changed. Break of high, trend has changed, and we are looking at this what? At this order block in this area. This order block is the one we are looking at. As you can see again, price does not come back and retest that what? That order block. Now this high has been broken. We move on to this high. After this high has been broken, our attention shifts to this one, to this order block. This is how price moves, and this is how you ought to read price. Price comes back, throws a pin. When you see a pin on boom and crash, that does not happen every day. So you have to load your guns. If you see a pin on what? On boom and crash, look on your charts on boom and crash. Wherever you see a pin, that's a very good confirmation of your trade. So this would have been very good. And if you are someone who likes to pump up lots, you should look for more money and deposit a lot of capital for you to do that. Just joking. Price breaks this high again, also breaking these structures to your left, and price does not make its way back to that order block, and we're just leaving it like that. So this is how you are reading price. After that, you see price breaks this low, price breaks this, and it leaves this one, this order block right here, this order block right. Price misses the order block a bit here, then comes all the way breaking the structure, but finally makes its way to this order block and throws a pin. Remember what I said about the pin on boom and crash? Yes, you are loading your guns right here. Your stop loss goes above the order block. This is how you are trading this. So if you were trading today, this would have been your order block. This would have been your order block, and they would have given you a pin, and you would have entered there, caught your spikes as you like it. So let's look at another crash or boom. Let's look at boom this time. Okay, so this is boom now. So you see boom booms to the upside. So from this one, you see that from this area we've broken this high. So we've broken this high here, and price is making its way up. We've broken this high again. So we break this high, price breaks that high, forms this order block. Price comes back to retest that OB. You are buying. This is how price is moving. You are buying. So price breaks this high, breaks these structures. So this is actually a double top. So there is liquidity resting above this high. There's liquidity resting above these highs. There's liquidity resting above these highs. So when price makes its way above it, see there is liquidity taken. So that alone makes this order block very much high probability in our trading. So we'll be looking at this OB and looking at price to come back and retest this as we would want to see. So price makes its way up, then comes back, retests this order block, which is responsible for taking liquidity above these highs, So this is essentially a double top where we are having a lot of orders tagged on top of what? On top of that that higher high. So something like this. So price takes that liquidity, takes all the dollar signs there, then comes back, retests this order block, and look at that move. So these are the moves you are looking for. Then price breaks structure, breaks this high, and leaves these order blocks in this area. You see? So these are strong demand zones or order blocks which you can be taking advantage of if you know how to read this. My students know I'm very proud. Okay, so this is how it happens. Comes back, retests and retests and retests. So what you are doing is you're just looking at price. Don't look at anything else. Don't try to catch spikes. Don't try to trade on the what? On the M1. Yes, exactly. You don't want to be trading on that time frame. So this is an order block, and this is another order block which price is respecting. So you're just looking at market structure and order blocks, and you're just capitalizing on those two elements. So this is how you look at boom and crash. This is how you read boom and crash candles. Don't spend your time, don't spend your day looking at the M1 time frame. The M1 is not good for you. There's too much noise, there's too much spikes there. Look at this time frame, look on the M15, look on the H1, and kill this thing. Thank you guys. Trade what you see. See you next time.